So good morning and welcome to our next episode in our Lettings Launchpad series of PCS Pods. So I'm Kate Forsdike, I'm a Director of PCS Legal, and today I'm joined by Carly Clark of Conquer Accountancy, and today we are going to navigate the financials when you let out a property. So hi Carly, thank you for coming in today. So what are the tax implications of renting out my property and how does it affect my overall sort of tax situation?
Hi, thank you for inviting me on.
Okay.
Basically, if you're renting out property, really you've got to just make sure that you factor in your other income. So if you're employed or if you're self-employed, just make sure that you understand that may push you up a tax band potentially.
Yeah.
You need to register for self-assessment if you haven't registered already. If you're on PAYE, then you've probably not even ever logged into your government gateway or registered for one. So make sure you register for your government gateway on the HMRC website and submit your self-assessment by the 31st of January.
Okay, so could I do my own self-assessment tax return each year, or would I be better off instructing an accountant like yourself to help me? And also, is there like a special type of accountant? So if they're ones that specialise in property and stuff, or could I just instruct anybody?
So you can do it yourself. It's, more than allowable that you can do it yourself. It's just making sure the benefit of having an accountant is that they're going to get you all your allowances, ask you if you've claimed for all your expenses. If you've missed something out, they might say, have you paid for your boiler service this year?
Yeah.
You forgot about it.
Exactly.
That is the main benefit of using an accountant.
Okay.
Something also that's worth bearing in mind is making tax digital for income tax.
Right.
Is coming in April 2026.
Okay.
So if you make over £50,000 profit as a sole trader, renting out property or in a partnership, you're going to have to use software to submit your tax return.
Ah, that's interesting to know.
Yeah. So again, I actually use a specialist software for my lettings clients.
Yeah.
But you can use any of the accountancy softwares really, just make sure that they're MTD compatible. But so that might be, an accountant that's on our radar. We know that's coming. Also, some accountants may well specialise in just landlords, but I've got all different clients, so yeah.
Okay, brilliant. So are there sort of any expenses that I can deduct from my rental income?
Yeah, loads. Well, not loads, but yes, definitely.
Sounds good.
Totally deduct all your expenses, because anything you can deduct will reduce your tax bill. If you use an accountant, the fee that they charge you, that can be deducted.
Okay.
If you have, say, you're just starting out and you've drawn up a contract and used a solicitor for that, you could deduct your legal cost. Mm-hmm. Obviously, every year as a landlord, you have to have your boiler serviced.
Yeah.
So the cost of that you can deduct. If you use a managing agent, then you can deduct the fees that they charge you. Any maintenance on the property, if the tenant breaks something and you have to pay to fix it, then you can
do all maintenance and repairs stuff,
everything. So my advice, I always say to people, if you're not using software, just keep every single time you pay out for something on that property, keep the receipt.
Keep it all separate as well, so you don't forget stuff.
Exactly. And even if then, say you use an accountant and I turn around and say, no, you can't claim for that, at least you've told me about it and I can make that decision. Whereas you thinking, oh no, I won't bother, and it could well have been allowable. So the only thing to watch out for is improvements to the property. So if you need, say, a new boiler and it's an improvement on the old one, you have to put that against a future capital gain rather than your income. So that's why HMRC make a deduction just for against your income as for expenses rather than improvements.
Right, I see. Okay, so is there any sort of monetary limit on any deductions? So say, I suppose, if I had loads of stuff to deduct, could I kind of go in the minus and make a loss on that?
Totally, and especially, if it's your first year and or say you had a tenant move out and you've got to do lots of decorating and things, if you're not claiming that back from the tenant, you could well have quite a lot of deductions in that year, and there isn't any limit. Obviously, you've got to have receipts, and HMRC might look at it and think, year on year, say, and think, oh, hang on a minute, this looks a little bit high.
Yeah, of course.
But as long as you've got receipts and it is reasonable and justifiable, then you can claim it. The only thing with mortgage interest that changed quite a few years ago, you cannot claim for your mortgage interest anymore.
Right, okay.
We have to know about it because it increases your personal allowance. So they take 20% of the mortgage interest you've paid and add that onto your personal allowance. So you do get a slight benefit.
Right.
But you can't deduct it as a cost anymore.
Right, okay. So how long do I need to keep records of rent income and deductions?
So the guidance HMRC say is 6 years. But to be honest, if you can, I'd say this to all my sole traders as well, just take photos like nowadays on your phone, take a picture, keep a folder, because HMRC can actually go back 20 years if they want to investigate you.
Yeah.
So, it's highly unlikely as long as you're following all the rules.
But it could happen.
But, they've got every right to. So, if you've got all of those photos on your phone, then...
You're never going to go wrong, really, are you?
You've got all your backup.
So can you explain to our listeners what capital gains tax is? It's a big one.
Yeah, it is. So with regards to residential property, there's different rules. So if you sell a house that isn't your main residence and you make a profit, then you will be liable to capital gains tax. So if you bought out a house for £100,000 and sold it for 200, you're going to get charged on the difference, 100,000.
Okay.
You do have to. So if you sell your residential property, you do have to now do your return within 60 days of completion.
Right, okay.
You can do it online. There's a special capital gains for property login, so you have to register for that. Again, you can get an accountant to do that for you.
Yeah.
I've done those for a few clients. Your rates on residential property, so if you're basic rate taxpayer, it's 18%. Your higher rate or additional rate is 28%.
Okay.
You do get at the moment £3,000 a year allowance.
Yeah. So it could all change though.
I was going to say at the end of this month in October, who knows what they're going to give us and what the rates are going to be. But for the 24-25 tax year, then that's the rates and the allowance at the moment. You do get as well whether you've ever lived in the property or not, for the last 9 months of ownership, you do get what's called principal residential relief. So that basically, if you've owned the property, say for a year, they'll give you 9 months free. So you'll only be taxed on the first 3 months. If you have ever lived in the property, then again, you can take that
bit off, yeah.
So you would, if you've owned a house for 10 years, you lived there for 5 and rented it for 5, you'd only be charged on the 5, so 50% of your gain, basically. Yeah. But again, you have to have records and to be able to prove that you lived in that house, whether that's, your tax, council tax bills and things like that. And again, as I say, you can reduce down your profit. So if you sell a property, you come to yourself.
Yeah.
And so all your costs, we can take those off.
Right.
Whether that is in relation to the purchase of the property or the sale of the property.
So you can go back from when you bought it as well.
And take that off. And also, as I said before, any improvements on if they've, made it. Basically, because they're thinking if they've increased the value of your house, then you should be able to claim that to reduce your tax burden.
Okay.
So, in a very short nutshell, that's capital gains.
So it's probably still a good idea to speak to somebody like yourself.
I would definitely for capital gains.
So you can maximise the gain or minimise
because they can be quite
really.
Chunky, really, in the end. If you've owned a property for a long while, generally, property goes up over the long term.
Yes.
Hopefully, that's, usually why you want to do it is the investment.
Yeah.
So to make sure that you're not paying too much tax, because everyone wants to pay what is due.
Of course,
but you don't
want to pay too much. No, nobody wants that. That's for sure. So what sort of impact does having a mortgage on my rental property have?
So as I touched on before, you can't deduct mortgage costs from your income or your capital gains. Again, as well as the interest, you can't deduct as an expense. But as I said, you have to keep a track of your interest so that there's a separate section on your self-assessment form which you put in, and it will work out for you. It will add 20% of those costs to your personal allowance. So if you're just a normal earner, you'll get your £12,570 tax-free.
Right.
And it will increase that for you by the percentage of your interest that you've paid.
Okay. So would I be better off paying off the mortgage on my rental property or keeping a charge on there?
That really, really depends on your own personal circumstances. I think we said is if you're maybe first starting out, you might want to pay off some of that capital, so that get to own that property sooner. But if you're not particularly worried about that, if you see it as a long-term investment, lots of my clients have interest-only mortgages.
Right, okay.
Just purely because then your repayments every month are less.
Yeah.
You're going to worry about paying off the mortgage when you actually sell the property, which is, if that's not for another 20, 30, 40 years, if it's like your retirement plan, then you're not too worried because you're hoping that the gain that you make on the property after your tax is going to be enough to pay off the mortgage and leave you with a nice lump sum. But I would always advise speaking to a financial advisor to see what fits in with your budget as well, because if you can't, if you've got your own personal mortgage, you might not necessarily want to pay two big mortgages. You might want one interest only and one capital plus interest. So
that makes sense. So I've seen people create like a limited company for their rental portfolio. So what's the benefit of doing this, and when is the best time to create it?
Yeah, so again, it's very individual thing, and you have to look at your own personal circumstances and your tax liabilities, the other income that you earn. But the main reason lots of people do it is, number one, they might have a portfolio of properties. So if you've got, say, 10 rental properties, you might be earning quite a chunky bit of money. To add that into your income as well, your income rate, you might be pushed up into your higher rate band. You're going to, and then that even might, if you're a higher rate earner, that's then going to have an impact on your capital gains if that arises. So you might want to look at that. Putting them into a company means you can deduct your mortgage interest as an expense in the company. You can then take, say, a small salary out as a director of that company. Yeah. If you're making a profit, you can take dividends. And dividends are obviously taxed lower on a personal income.
Right, okay.
But so you really need to look at which is the best way for you personally to do it. Okay. Because you've obviously got the costs associated of having a company. Generally people, again, you can do it yourself, but generally people get an accountant to file annual accounts for you. You have to do a confirmation statement. You have to do your corporation tax return. And again, you've got to pay corporation tax on your profit. So it's not tax-free putting it into a company. It's just, at the moment, corporation tax rates are lower than your personal tax. So if you're just starting out and you've got one property, you're probably all right. And if you're only ever going to want to have that one property, you're probably all right keeping it just personally. Yeah. The only thing as well to just be aware of is if you are going to transfer them into a limited company, there may well be a gain coming out because you're selling essentially those properties really to the company. So you're gaining something from that personally. So you need to look at the capital gain implication on that as well. So there's lots to look at.
Lots to think about.
So again, I would speak to an accountant or speak to a financial advisor and say,
get some advice.
Overall, how would this benefit me?
Yeah, no, that makes sense. So have you got any other advice or tips for people that are looking to maybe rent their properties? Any sort of financial advice if they're thinking about it?
Yeah, I would look at, I guess for me, because I deal with numbers all day, every day, and people's money, I always think, okay, how is this going to affect me financially?
Yeah, of course.
But you've also got to look at the hassle as well, because you think, if this is only going to make me £100 a month, is it really worth dealing with the tenant?
True.
Because I'm sure 9 times out of 10, the tenants are fine, but actually if you have a problem tenant, is it worth the hassle of that money? But if it's, if you want a retirement investment, I always think property is really good.
It's a good place to start.
But and I just make sure you know exactly what you're doing tax-wise, your self-assessment-wise.
Just make sure you get all your ducks in a row.
You don't want to fall foul of any rules and end up with penalties and interest and tax owing and all the rest of it and eat into your profit. Because, essentially you're wanting to make a profit and make your life better, aren't you? So,
true.
I would,
so make sure you get the right advice before you start.
That's it. I was going to say, speak to yourself, speak to an accountant, a financial advisor. Just, make sure that all the numbers add up and it fits in, with your life.
Brilliant. Well, thank you so much for coming in today. It's been really interesting to learn a bit more about the numbers side of things anyway. So, thank you.